All right. Okay. Can you- Okay. Okay. Yeah. I All right. Good evening and welcome to yet another live webinar here at Crypto Base Media. It's indeed a pleasure to have you guys around and a privilege to be amongst you. So, like you all know, um, my name is Crypted Joe. I'm a features trader like everyone here, and also a tutor by God's grace, which is the reason why we are here. So, um, today's topic um, is strictly based on um, risk management. Yes, risk management. The concept of the key concepts of risk management. They are the things to look out for, and the things to consider, things to put in place to make sure that you're on track. You understand? To make sure that even if you lose a particular trade, you should be on the right track. Yes, you lose the right way. You understand? Not the type of trade that you go into, you don't even know how much you will lose, you don't even know how your position sizing is, you don't even know how it will be at the end of the day if the trade goes against you. You understand? So all of this is what we are going to be discussing today. Um, how to, you know, calculate stop loss, and we'll be taking a look at margin, leverage per trade, and all of that. And we'll be using Bybit. Understand? So some other things will be talked about how to use Bybit also concerning our topic today. So that's it. So if you are live with us, you have joined. So introduce yourself. Tell us where you are watching us from, your name, and where you are watching us live from. So we can begin the class quickly. Once you join, tell us your name and where you are watching us live from. So we can start immediately right into the class. Your name and where you are watching us live from. Your name and where you are watching us live from. So we can start immediately without wasting much time. Okay, I can see some of us are active already. I can see Mr. Kalu. I can see um, is it Mrs. Amaka from Lagos, Mr. Eze, Wisbrain, Kingsley, and the rest of you. So you are very much welcome to the class. Like I said, today topic is strictly on risk management, how to calculate stop loss, how to calculate your stop loss properly, um, your margin, and then your trade. All of this to be discussed in today's class. You understand? For profound knowledge on how to go about entering trades, calculating your stop losses, and everything about it. So um, I'm going to set up my Bybit now because that's the exchange we'll be using today and I've always been using. So let me set it up. So that reminds me, if you are here, you don't have a Bybit account yet, because that's the exchange we have been using from the onset. So if you don't have a Bybit account, endeavor to click the link in the groups, have an account so you can be catching up with us here with whatever we are doing in our subsequent classes. So Bybit is the exchange we are using in all of our classes. So if you don't have an account, sign up and then have an account. If you can deposit, fine. So you can be following us with each and everything we are doing here because that's the exchange we are using. So that's by the way. So I'm going to log in my Bybit now so we can start immediately. So basically, whenever you are taking a trade, you normally have three um, three factors to look at: your entry, your take profit, and your stop loss. These are your three major orders you take from a signal. Either you do the signal yourself or from someone else's signal. You understand? Entry, stop loss, and then your take profit. These are three major um, factors in a signal. So um, we'll be using those three factors now to explain how we're going to, be placing it in our exchanges for a proper um, taking of signals and then calculating our losses, margin per trade, how to use leverage the proper way. You understand? To minimize losses and then maximize profit. So that's just the key um, importance of this class. You understand? How to At the end of this class, our major aim is to with the knowledge we are going to be getting tonight is to minimize our losses and maximize our profit. So that normally we all know that in your trading view, your stop loss is the one in red color, and then the one in ash or black is entry, and then the one in green is your take profit. So that's by the way. So we are here now. Okay, let me change it to this particular coin that is on my trading view, Hype USDT. So I'll go over here, change it to Hype. Okay, having changed it to the coin we want to use now. Now, when you open your Bybit, of course, there are some key factors here to consider. You understand? Especially when you're just starting out. The first thing is to look at the top, make sure it's on isolated. You understand? Make sure it's on isolated. Whatever you learn here and then maybe in your subsequent trade, you kind of set some wrong things here. Some things you set, maybe some of the things you understand here, you set them wrong. That knowledge might not work well for you. You get. So it's important you pay attention and then make sure you apply whatever you learn here in your own personal trading journey. Understand? So the first things first is to make sure that that isolated is showing, not cross like this. Make sure if you see it on cross, you just change it to isolated. Yes. Now the difference between cross and isolated is that isolated margin is the type of margin that lets you enter a particular trade with some amount of money from your balance. Yes, they will take a particular amount from your balance, and then it is from that subtracted amount that you risk um, a particular amount from. Let's say, for example, you have $100 now on your Bybit account, and you want to risk $5 on that trade. Now, let's say you enter the trade with um, $10. Now, when they minus $10 from your $100 account, you'll be left with 90. Now, let's say you didn't use stop loss and then the trade goes against you. You will lose the whole of that $10 and then you'll be left with 90. That's the case of not using stop loss, you understand? If you don't use stop loss, it is that $10 they subtracted from your balance that will go, that you get liquidated um, with. But if in the case you use stop loss, which you normally recommend always, if you use stop loss and then you want to risk $5, inside that $10 you use, you are going to lose 5. And then if the trade goes against you, hits your stop loss, you will lose 5, and then remaining 5 from that $10, the 5 remaining will be returned back to your balance. Now, instead of having 90, you now be left with 95 because you set it that if the trade goes against you, you want to lose 5. So 5 from the 10 you enter the trade with, 5 will be left and returned back to your balance. Now, the reason why is because it depends on the leverage you use. The amount you enter the trade with depends on the leverage you use. You understand? It is your leverage that will determine the amount you will enter the trade. That's the cost. You see it here. This cost. The quantity is um the total amount of the coin that you'll be holding. You understand? So that's the quantity. How many pieces of the coin you are buying. Now the cost is the actual amount you are entering the trade with. Then of course this one will now show your liquidation price. You understand? So that's for isolated. You lose the money they subtracted from your balance and all of it will be lost. But the one remaining after they subtracted that one will still be left in your balance. Whereas in cross margin, if the trade start going against you, let's say example you didn't use stop loss or you forgot to set stop loss. If you enter the trade with $10 and it start going against you, for example, once that $10 gets exhausted, like everything is gone, that $10 is gone, they will start tapping from, instead of the trade to close automatically, they will start tapping from your main balance now to cover up that trade, to keep on managing your position size for you, managing that trade for you. So they will be tapping from either your futures, your derivatives, or your spot account, wherever you have USDT. That's why it's called cross margin, to be crossing over to your balance in your trading platform. Yes, just like forex now. If you enter a trade with um enter a particular trade some with a particular lot size, and then you didn't set stop loss, you see that um your equity and your balance will be like, you will see some changes there. If you start going against you, you see that your equity will be running in loss. Equity is your balance plus profit or loss. You see, you'll be seeing it in your um equity there. Basically, forex is cross margin type of trading. You understand? So that's it. If you don't use stop loss, for example, you didn't use stop loss in forex, it will be running in loss till your balance gets to zero. That's how it is in cross margin, even in crypto. If you don't use stop loss, you lose all the money they subtracted from your balance to open the trade. And then if it's still going against you, if it is still going against you, you'll keep on tapping from your balance to balance up the trade up till there's nothing left again, then the trade will now close. But that's not what you want, I guess. So you stick to isolated margin. Use isolated margin, and then use a low leverage. This one is for leverage. If you want to use a particular leverage that is not here, you click on customize, then you type here. You type whatever leverage you want, you type it there, then click on confirm. And then another thing is to make sure that it's on limit, not on market. Just like it says here, a limit order is an order to buy or sell at a given price. You understand? For example, now this is IPUSDT now. Let's say I want to take a short from this particular zone. Let me even mark it. Let's say, for example, I want to take a short here from this particular area. You see, now the price line or price area for this particular entry zone. Normally, if you want to take a short, when you use your rectangle tool, the lower part is your entry, then the upper part is your entry if you want to take a long. Now, the particular price range for this particular area here as my entry is for 43.545. That's my entry. So I'm waiting for it to get to my entry here before it start going down. Basically, after considering some other key factors, you understand? So, because it's not how to do a third corner, it's just a rough example. So I'm waiting for it to get here, then start dumping. So my entry is um the entry the price range I'm waiting for it at is 43.545. So that is what I'll type here. So I'm waiting for it at 43.545. So once it gets there, it should start dumping. So when I place the trade now, it will be showing in the order section here. It will be showing in uh, open orders. It will be showing here. Then when that particular when the price gets to this zone and start dumping, it will now move from the order section to the position section. That's when the trade has triggered and is now moving. You understand? So that's how limit work. Then for market, basically, if you are using limit, you have two boxes. One um for your limit price, that is your entry price, and then other value box. We'll talk about that one after explaining this market. Now, market order um is the type of order that will kind of immediately triggers your buy or sell order. You will enter at the current price. Let's say, for example, I want to enter this um high PSDT trade now. I want to enter a long to this particular area. If I should click on long using market order, once I click on this long, immediately my trade will get filled. My buy order will get filled, and then it will be showing under this position section, and it will be active and running because I entered at the current market price, which is 41.425. 2 0 and 4 continuously like that. You understand? For basically 41.4 something. So it will trigger at this particular coin market price, and then my order will be filled and trade will be active and running. That's what market does for you. Immediately entering at the current market price. Whereas in limit, you set a particular price, wait for it to come there before start before you start dumping, or before it will start pumping, depending on the order, buy or sell. Now, this particular box now, if you are using limit, I said you see two boxes. One is for entry, one is for your order value. That is the order value box. Now, the order value box is simply the amount of money that you'll be needing to open that particular trade for you. You understand? Because you are using leverage now, and that leverage is simply it's leverage that you use to kind of borrow money that is required to open that trade for you. Now, let me explain. For example, now you want to enter this trade with you have $100 account. You want to enter this trade with $10 from your $100. You want to buy bits now to deduct $10 from your $100, and then you want to risk $5. Let's say you have $100 now, you want to risk 5% of it. 5% of $100 is $5. So you are telling Bybit now, based on what I'm going to show us now, you are actually telling Bybit that you want to enter this trade with $10 from your $100, and then if it goes against me, I hit my stop loss, I want to lose $5, and the remaining five should be returned um, to my balance. You understand? So that's how it will be. I hope you are all following me. So that's how to um, go about setting. That's the the basics of using Bybit to enter trades. You understand? First of all, you set your limit, set it to limit, set it to isolated. Now, like I was explaining, I said you have 100 USDT in your balance and you want to risk 5. You want to enter with 10 to risk 5. What you do is you multiply that your the amount you want to enter the trade, which is now your margin. The amount you enter a trade with is your margin. That's what we call margin. Amount of USDT or amount of dollars you want to enter a trade with from your balance to be deducted from your balance to open the trade for you. That is your margin, the amount you use to enter the trade. So now our margin is $10. We want to use 10. We are telling Bybit now that we want to enter a trade with $10 to deduct 5 if it hits our stop loss. So what you do is you multiply that with your leverage. Let's say, for example, we want to use this 10x leverage. I want to enter the trade with 10 um, dollars. So multiply 10 by 10. So you do the math. Let's calculate it. 10 by 10. That is 10 multiplied by 10. It will give you 100. So it is this second box now that you now type it here. It will now look like as if you're entering this trade with $100, whereas you are just entering with $10. You understand? Now, for you to open up the trade, you will need $100 and you don't have it. Though you have it as your balance, like your trading portfolio, but you don't want to enter full You want to go all in, like full margin. You don't want to go full margin. That is using all of your balance to open a trade. So now you will need to borrow some money or some funds to open up that trade for you. That's what leverage will help you do. Now you want to enter a trade with 10 USDT, $10, and to risk 5. Now to open up the trade based on this leverage, you will need $100 and you don't have it. So based on this 10x leverage, now you multiply your margin, which is 10 by this 10, to give you 100. So it look as if you are entering the trade with $100, whereas you're just entering with um 10 USDT. So for example, now let's, from this example I gave, this one here, 43.545, you will type it here, 43.545, and you type your 100 here. You see, now I told us in my previous explanation that cost is your actual margin, that's the actual money you are entering the trade with. You understand? So this is it here now, cost. Now for me to for this particular trade now, the current price of hype is currently at 41.546 cents. So I'm actually buying 2.4 hype. So I'm buying almost two and a half pieces of hype. For example, let's say I'm trading Bitcoin now. This will actually it will actually be like I'm buying 2.4 Bitcoin, almost two and a half Bitcoin. So this particular trade now, I want to hold 2.4 quantity or pieces of hype, and it will cost me $10 to open up the trade. And based on my leverage, I borrowed money to open up the trade so that I'll be able to open up the trade. So I will need $100 to open the trade. So I want to enter with $10 and I don't have that 100. I don't want to go with 100 because my balance is 100. I don't want to enter with 100. So I will need to borrow money to balance up the trade based on position sizing. Now this is what they call position sizing, margin and leverage. That's what to give you a position sizing. It will help you to balance up everything for you. So I want to enter the trade with $10. This is the cost. You see it, 10 here. Now 10, I want to use 10x leverage. So I'll multiply it, my margin. You multiply your margin by your leverage. Whatever value you get, you type it here. So it will not look like as if you're entering into that value, but actually you're entering with that your margin, initial margin you want to enter the trade with. So this is it. Then next thing is to activate your TPSL box. You understand? First thing first, you type in your stop loss and then your take profit. Okay, let me do something real quick. Let me do something real quick. Short position. Yeah. So I want to get us our entry, stop loss, and then take profit. This is just a rough explanation, no technical analysis here. This is not an analysis, just rough drawing. If you want to do an analysis, there are some other things to consider. You understand? So this is it now. Our stop loss is 46.560. So if you start going, if it comes here, if it comes to 43.545 and you start pumping, that is going against us now. Bybit should close the trade for us when the price goes to at exactly 46.560. That's what stop loss means. We type it here, 46.560. Take profit 36.426. 36.426. Okay, now you see expected loss is 6.9, and we want to lose just $5. You want to lose just $5. What you do is you reduce your order value, you reduce it. I want us to understand something. 45.616, 45.616. This is our stop loss, and then our take profit is 36.4426. Let's take it back to 100 again. Perfect, very perfect. You see it now. Expected loss is 4.7, 4.7559. If you approximate, it will give you 5. You understand? Because after the decimal point, if the number is 5 and above 5, you approximate, and then it will affect the next digit after before the decimal point. So 4.7 approximately, when Bybit adds their closing fee and all that, it will be 5. So you are risking 5 to make $16. It sounds well, Abi, balanced. A very good risk reward ratio. You understand? So this is, I'm trying to I'm telling Bybit now that if the trade goes against me, instead of that, instead of the coin, like, if when it gets to this point, it should start dumping down to this point of my take profit. But if, for example, there is a news that comes up on the all the demand start overriding the supply, and then it starts pumping, then Bybit should close the loss at 45.616, and that's 45.616. That's what I typed here. So it is an order telling Bybit that if it goes against me, kick me out with my loss and return the remaining balance to my account. Now you can see that my cost, I'm entering the trade $10 now. I'm about to, I am risking 5 from this 10. So if the trade goes against me, I'll lose 5, and then 5 will be left. That 5 will be returned to my balance. It will be returned to my balance. Now, from 100, it will now be 95 because I risk 5%. So I'm trying to make sure that on this particular trade, I don't want to lose 5% of my account, which is $5. If it is $200 account, 5% is $10. And if you can't stomach that much amount, you reduce it to 3, 2, or 1%. You understand? So for this particular example, I use 5%, and 5% of $100 is um $5. 5% of $50 is 2.5. 5% of $20 is $1. So you are risking $1 on every trade if you're having a $20 account. So that's basically it. Know the 5%. If you want to, like, when you deposit, choose a particular risk tolerance to be using. If you want to be using 1%, continue using it. Don't change to one. Don't use 1% today. Don't use 2% tomorrow, and then 5% next tomorrow. No, it will like affect your psychology, and then also your account also. You might just be like hitting break even back to back without even making profit, or you might even be running in loss over time. So just when you deposit, tell yourself that, okay, on this particular account, I want to be risking 2% till I grow the account, or probably when you encounter losses, and then maybe the losses override profit, and then you lose the account. But technically, if you choose a particular risk tolerance, like a particular percentage to be using on that account, and use it all through, and then you trade when you see your setup. I believe me, in the next 3 months you should still be trading that account. You understand? You trade with stop loss and take profit. You trade when you see your setup on the chart, and then you continue using a particular set um, risk tolerance. If once you continue doing that, these three things, you should still be trading with that account in the next 3 months, probably up to the sixth month of that deposit date. You understand? So this is just the magic behind it. You understand? There's no two ways about it. Your margin multiplied by your leverage, and then you set your take profit, your stop loss, and then make sure you see whatever you are going to lose first before you talk of profit. Because your number one goal as a trader is to know the amount you are going to lose on that trade first over the amount you are going to make. You understand? So I hope we are all catching up and following so I can continue. Okay. Since we have questions in the comment section already. Um okay, for those of us that are just joining in, there is always a recap or a recorded version, so to say, on every class. There's always a recorded version of every class. The previous ones, both this one and the next ones that will be holding. There's usually a recorded version. So if you come late and maybe you didn't meet up from the beginning, you can go over the recorded version. Once the class ends, the recorded version will be available immediately. You can also be going through that one at your leisure time, and then for better understanding of the topic. But the importance of coming to the live class is you get to ask your questions, and then you get them answered right away. You understand? So that's the importance of attending the live class and coming early also. So you can start dropping your questions now before I continue with some other basic concepts before we call it a day here. You can drop your questions. If you have questions on based on what we have discussed so far. Okay. It seems quite a number of us understood. Just a few of us haven't grabbed that explanation yet. Okay. Mr. Johnson, what I did here was, let me open it up again. I did a rough, let me even start from the beginning again. For your sake, let me start from the beginning again so you can understand it. Now, this is just a rough analysis. I just did a rough one. It's not a valid analysis. There are some other key factors to look out for before you can call it a setup or a technical analysis. Now, I just decided to take my entry here to like take the market down when it comes to this point. Now, with the help of my rectangle tool, I got to get uh, I was helped to get the price range, like the price of the coin at that particular level, this particular line here. So that's what my rectangle tool helped me with. So when I highlight it, I will see the particular price for that particular line, 43.545. That's my entry. When you're taking a short, use the lower part of your rectangle. You are taking along the upper part of it based on entry models and all that. So my entry is 43.545. My take profit is 36.426. When it comes here and start coming down, I want to be out at 36.426. And then if it goes against me, I want to be out at 45.616. So these three digits is what I'm working with. This one is my SL, this one is my entry, and then this one is my take profit. Now, I want to enter the trade with $10. Now, it will require me a higher amount of money to open the trade based on um, position sizing, because what leverage helps you do is to help you um, open up the trade with borrowed money. Because if you want to open up the trade with your own portfolio, believe me, you won't be able to like open that trade, because based on the quantity of that asset you are buying, it will require you to enter at a very higher amount, and most of the time it's normally higher than your uh, your account or portfolio. So that's where leverage comes in. It helps us to borrow money to balance up that trade for us, like to open up that trade for us, because we don't have the sufficient amount for it. So let's say um I have $100 account now, and I'm telling Bobby that from this $100, take out $10 from it and open this trade for me. And then if it goes against me, I want to lose five, then return the rest to my balance. Now I want to enter with $10, and I want to use a low leverage, as low as 10x leverage. What I will do is margin multiplied by leverage, and margin is the amount you yourself personally want to enter the trade with, which is $10 now. In my own example now, that $10 multiplied by 10x leverage, margin multiplied by leverage, which is 10 multiplied by 10. So it will give you 100. When you press your calculator, 10 by 10 will give you 100. So you type it. First of all, you type your entry price here, 43.545. 43.545. Then you type in your other value here, which is margin multiplied by leverage. You can see now you are entering trade with $10 now. So you check the cost to see that, okay, oh, if you are truly entering the trade with that amount you want to enter, the amount you are telling Bybit to open up the trade for you, if truly that's the amount they will deduct from your balance, you check the cost. You check the cost. This cost, which is 10.1, you understand, which this does $10. Now you set in your take profit and then your stop loss. First things first, stop loss, which is 45.616. 45.616. Then your take profit, 36.426. 36.426. You see now, you are good to go. You want to lose $5. If this is 4.7, once you approximate, or like Bybit add up their closing fee now, it will be 5 exactly. So which is minus 47.55 percentage of this $10. You lose minus 47.55 percentage of this 10. When it goes against you, you lose $5. And then if you hit your take profits, if it hits your your full TP now, for example, you will make back 163.48 percentage return. You understand? Okay. I'm seeing some questions. Okay. What is SL? What is TP? It's just abbreviations. Sorry, I didn't state about that when we started. SL is stop loss. You can see it here. Whenever you want to enter a trade, there's a box you see SL. Some exchanges will put it as SL, some type it in full for you, stop loss. In my own case, I'm seeing stop loss. Then take profit is TP. TP is take profit. That's the point your trade will go to, will get to, and then you get out of the market in profit. Stop loss is the price range where the trade will get to, the market will get to, and take you out with the little loss you set to lose. You understand? So SL is stop loss, take profit is TP, or TP is take profit rather. So just simple basic terms, you understand. Some will call entry ET, but that was just grammar. Everybody just forming their own stuff, you understand. Some people like to turn some basic things into like something formal to just sound, professional, blah blah blah. Just basic concepts. SL, stop loss, TP, take profit. You hear somewhere that my trade just hit full TP, man. I just made so much money. Or you hear someone say, that trade hits SL, that's loss. You understand? So that's just it. Um who else? Who else? Before we continue. Okay, how do you reduce your value? Did you reduce your leverage to get your loss? No. What I did is um I want to lose $5. Now, based on my risk reward ratio on that particular trade, my risk reward ratio is 3.44. Actually means the amount I want to lose, multiply it with this risk reward ratio here. Basically, on your exchange or on TradingView, this one is for example, on this hype USDT now, this is 3.44, excuse me, which means whatever amount you are risking on that trade, when you multiply by this risk reward ratio, which is in my own case now is 3.44, that's the amount you will make when the trade hits your full take profit. Now, when you multiply, I think I have my calculator here with me. When you multiply 5 multiply by this 3.44, it will give you, okay, let me go with this one I'm seeing here, 4.75. When you multiply it by 3.44, exactly, I have with me 16.34. You can do it in your own end there to confirm with me. Multiply 4.75 by 3.44. It will give you 16.34. This is it here, expected profit 16.3486, which is just basically after the decimal point, the first two. The first two is what you pick out. So 16.34, and in my calculator here I have 16.34, which actually means I'm going to make back three times my risk. I'm risking 5 to make um, three times my risk, which is 15. But basically, because of the added, something after the decimal point there, this 3.44 at the back. So it kind of added almost a dollar plus. So this is actually a good risk management strategy, like a very good way to a very good and healthy way. Yes, a very good and healthy way, and also a proper way to enter this trade. If it goes against me, I'm not going to lose more than 5%, which is $5. And if it hits my full TP, I'm going to make $16.34. A very good way, very nice, very good, healthy way to enter the trade. You understand? So that's it. It has little or nothing to do with leverage. Leverage is just when you are multiplying your margin by your leverage to get your other value here. After that, the rest is your placing your take profit and your stop loss digits from your signal or from your trading view if you did the analysis yourself. And then you check your expected loss first to make sure that that amount you have in mind to lose is what is showing. Then your expected profit also you check it. So to be on the safer side, then you click on long or short, depend, like this one now we are going short, so you click on short and then your trade will now appear in the order section. When the price gets to that 43.545, it will move to the position area, which actually means the trade has triggered and is now active and running. You understand? Okay. About that trade, how do we know when to long or short? It's simply based on your risk, your technical analysis. You understand what you need to see from your higher time frame. What are you seeing? You understand? Like this particular trade now, I've seen that from the higher time frame, it has been dumping, 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 and then on this medium time frame, I've kind of see like a major change has occurred from a downtrend. We're now to the upside, going to the upside, like from downtrend to uptrend, which is why I kind of, based on other key principles and factors, I got to get my entry here, and then I have my entry at 37.724, stop loss at 36.612, and then take profit at 42.508. You understand? So when you have the knowledge of technical analysis, you kind of get your proper entry, then your area to get out, your take profit, and the area to get out with profit, TP, area to get out with little loss, SL. So when you have that in mind, you have done your technical analysis, that's a topic for another day. So you get your 3 digit and then you place it on your exchange and then you click on long. In my own case, for this example on TradingView is a long. So I'll click on long button to wait for it at that point to come to my point of interest or my entry and then start pumping. Then for this example, it's a short. So I'll click on, after imputing the digits on that signal, I'll click on short and then everything will be placed. Then you now have to wait. That's another trading tool again. Patience. Then wait for it. So that's it about it. You know when to long or short from your knowledge of technical analysis. You understand? Okay, there's another one. I should explain this year. This year simply means dollar cost averaging. It's a kind of strategy that um, lets you minimize loss and maximize profit also. Understand? What this year helps you do is that, for example, now, let's say I've set everything here and I click on long, sorry, I'm taking a short. I'll click on short now and then it comes to my order section and then triggers and goes over to the position section and start going my way, and maybe all of a sudden it starts coming down and then reverse and start going up to the upside. What I will now do is to look for another key area. Let's say this particular side here. Let's say this side here, to see that okay, if it pumps enough and comes to that area, probably it should start dumping from here. So this is what I will now do. Now I will now check the price line or price range for that particular level, which is 47.323. Now what I will now do is now to place like another order for this particular price range here. Though I don't use this here, I haven't used it since a few years of trading futures trading. That's the only thing I don't know how to use, or I don't have knowledge about, so to say. But I actually know that, like, a rough idea is it gives you new entry and then cut down the losses for you. And then if the trade comes to that particular area and start going your way, you will make more money and then you have little loss. You understand? It gives you new entry and then you add to your margin because basically you are setting a new order. You understand? So that's what this year helps you do. So if it goes your way, you make more money. Basically, if you're a DCA trader, you majorly use cross margin and then you don't set stop loss most of the time. Not all the time, most of the time. You don't set stop loss because DCA will not let you set stop loss, because if you hit your stop loss, you are totally out of the trade. But if you want to DCA, you won't want that. You still want to be on the trade. So most of the time, you won't set stop loss and you use cross margin. So that's it for this year. Any other question? Any other question? Okay, Mr. Kelvin. Sorry, we don't have a physical class yet. We don't have a physical class yet. But we have a one-on-one mentorship. If you are interested in that one, we have a one-on-one mentorship. Put you through on the basics and every other thing you need to know better, both technical analysis, fundamental analysis, and the right coins to buy, whatever. If you want that, we have a one-on-one class session for that. But basically, an academy, not yet. But we have a one-on-one mentorship and tutorship. Understand? So, any other question before I will chip in one or two, then we'll call it a day. Okay, it seems I'm seeing something like some of us here can't access Bybit to use. Okay, the thing is, you go over to your Apple Store or Play Store, and then you download it. But if you are using website, like you have a PC and you are using website, you type let me see, okay, Bybit Global. Yeah, Bybit Global. You go to www.bybitglobal.com. That is if you are using a website to access it. You type bybitglobal.com or bybit.com/global. Then you can access it. It depends. It just basically the territory or the area you are in, like the territory you are accessing the website from. You understand? So most of the time, if you use that, when you add that global at the front of it, you'll be able to access it from wherever you are, as long as you have a steady internet connection. So that's it about that. Okay, okay. So any other question apart from what is Excel, how to set take profit and Excel, what is DCA, and all that? Okay, how to choose the leverage to use? That's a good one. That's a good question. Okay, for you to know the right leverage to use, first of all, you consider the account you are using, the account size you are using. You understand? The higher the leverage, the higher the risk. That's the basic of it. The higher the leverage, the higher the risk. You understand? And the higher the risk, the more closer you are to liquidation. Because once you increase your what's it called, your leverage, your stop loss will be so much close to your liquidation, and it might trigger your liquidation price first before your stop loss, because everything about trading is, especially when you're placing a signal, everything is order. All everything are orders. Your entry is an order telling Bybit that if you are using limit now, limit entry, your entry is a limit order, trying to tell Bybit that once it comes to this particular area, I want to enter the market at this particular price range. That's an order. Then your stop loss is also it's also an order telling Bybit or your exchange that once the trades are going against me, oh, take me out at this particular price range with my particular loss you set with your hand to lose, and Bybit will kick you out. And then your take profit is also an order telling Bybit or your exchange that once it goes in my favor up to this particular level, take me out from the trade and drop my profit to my balance. So everything is an order. Just like you telling maybe your junior brother or junior sister that please go to the kitchen and get me some glass of water. That's an order. You understand? So that's what you are trying to do with Bybit here. Just like a contract with them or a business with them. So at the end of the day, they take out their little um, fee, which is what they get from when you close the trade, closing fees. Some will charge you opening fee and all that. So that's it. Now, leverage. First of all, you consider the account size. For example, you are using $100 now. You want to lose, for example, you have $100 account, and you tell yourself that okay, on every trade I don't want to lose more than 5% of the account. 5% of $100 is $5. Okay, oh, I don't want to lose more than $5 on every trade. Now, what you now do is you make sure that whatever leverage you are using is not that high enough to make your stop loss very close to your liquidation price. You understand? Let me see if I can do something. Let me see if I can do something. And then take profit is okay. Taking a shot. Take profit 36.426. Oh, okay, okay, okay. It's not possible. So, based on the percentage, like the risk tolerance now, you have chosen on that account to be using on every trade. You try to make sure that whatever leverage you are using should not make your stop loss too close to your liquidation price. You understand? And how do you know your liquidation price? When you place in your, let me change it back to basic. When you place in your take profit and your stop loss, you see this particular box now, you are seeing quantity. That's the total pieces of the coin you are buying. The cost is the actual total amount of USDT or dollars you are entering trade with. Now you see LIQ price, which is leak price or liquidation price. It will show here. You see calculate. Once you place in your entry, your order value there, and then you activate your TPSL box, you fix in your take profit and your stop loss, and being satisfied with the amount you lose and then over the amount you make. You come here and click on calculate. Click on this calculate. That's why I ensure that if you don't have a Bybit account, you go to the groups, click on the link, have an account, sign up, and then so you can be following us up with whatever we are doing, because most of our teachings we use Bybit exchange. You understand? So on Bybit interface, after imputing your after entering your entry price, your order value, your TP and SA and everything, and being satisfied with whatever you are seeing here, take your profit and loss, and then everything, the margin you are entering into, if you are satisfied with all of that, you click on calculate. Now, when you click on calculate, it will now show you your liquidation price. Now, listen to this very carefully. If you are taking a short trade, this example now, this is a short trade we are taking. Now, let me take this off. If you are taking a short trade, make sure that whatever liquidation price you get here after clicking on the calculate rather, when you click on calculate, make sure that this it will be in yellow color, just like this calculate is in yellow color. It will be in yellow color. Make sure, since you are taking a short, make sure, I repeat, make sure your stop loss is way higher than that liquidation price, which will be in yellow color always. Your liquidation price is always in yellow color. Stop loss is the one in red. This one, sorry, the one you type in here, 45.616. Make sure that whatever what's it called, price that comes up after clicking on this calculate, make sure this your stop loss is way ahead of it. For example, if it comes out as sorry, that's for a long, sorry, my bad, that's for long trade. That's for long trade. It's a mistake. If you are taking a short trade, your stop loss should be lower than your SF. What am I saying? This is it. Take for example this trend line price range 47.033. This is your liquidation now. This is your stop loss. This is how it's supposed to be. Your stop loss should be lesser than your liquidation price in a short trade. So when you click on calculate, having set everything, when you click on calculate, make sure that your liquidation price is above this, or make sure your stop loss is lesser than that figure if you are taking a short trade. So in a short trade, make sure your stop loss is lesser than your liquidation, while in a long trade, make sure your stop loss is higher than your liquidation. Now for this example now, this is a short trade, right? This is our stop loss, 45.616. Now, what that leverage helps you do is that if you use a higher leverage, it will make this your liquidation price to be very close to your stop loss, or even sometimes closer to your entry. Now, if this trade triggers my entry and start going against me, it will trigger this my liquidation price first before even coming to your stop loss. But then you're already out of the trade. Now I'm going to lose all of these 10 USDT instead of 5. So to make sure that this liquidation is nowhere close to my SL, I'll use a very low um, leverage. So when I reduce my leverage, I'll click on calculate. to see my liquidation price. So when you reduce it, the more you reduce it, the further away it goes. That's why you are always advised to use a low leverage like 10x or like 5x when you're starting out, 10x, 12.5x, and 15x, 20x leverage. So the more you reduce it, the further it goes away. So that's why you see, that's why you know to settle at a particular leverage. You understand? So while in a long trade, your stop loss should be higher than it. Take for example, this particular line, this trend line is your liquidation price. Liquidation price as 36.296. So you use your leverage, click on that calculate, make sure at least the liquidation price is way low than it. So in a long trade, your stop loss should be above it, because once it triggers my entry now and start going against me, like dumping instead of pumping, start dumping, it should trigger this my stop loss first before even coming to liquidation. By then I'll be out already with my little loss. But if you use a higher leverage, this is what it will do. Your liquidation will be above it. So once the trade triggers and start going against you, what happens? It will trigger your liquidation price first before even getting to your stop loss. By then you're already out with all of these 10 USDT instead of 5. You understand? So that's how you know the leverage to use. You reduce it, click on calculate, make sure if it's a short trade, your stop loss should be higher, your stop loss should be lesser than it. If it's a long trade, like in this example, your stop loss should be higher than it. You understand? Because you should get to your stop loss first before the liquidation. So that's it about the right leverage to use in a particular trade and all of that. I hope we get the explanation. Yes, it's 4 hours time frame. Um, Mr. Okay, sorry, Mrs. Samaka. It's a 4 hours time frame chart on TradingView. For the short example, I use TradingView, but for the long example, I use my TradingView. Okay. How do I take partial profit if it hasn't gotten to my TP? Partial profit is when the trade has triggered. That's when you can set partial um, profit. You can take partial profit when the trade has triggered. So when the trade triggers, there's usually a button on Bybit. There's usually a button that you see close by. You see a close by there. You click on that close by. Then at the top you change it to limit. Then after changing it to limit, then for example now this trade let's say this trade comes to my entry, and then I want to take profit one here. That is TP1. I want to take TP1 here. Now for my TP1, I have 39.659 as my TP1 digit. So this is what I will type in that box. So after clicking on close by at the top, change it to limit, then this digit 39.659, I'll need it to type it in my partial profit section. So 39.659, I'll type it in that box. Then you choose the particular percentage you want Bybit to close your TP1 for you. I think we have, um, is it 25% now or 10% first? We have, I think 10%, 25%, 50%, 75, and 100%. So maybe your TP1, maybe you just want to have TP1 and 2. That your TP2 now will not be your full entry, a full take profit to get out of the trade. So your TP1 you can set it at 50%. It will close 50% of whatever profit you are having. Let's say for example you are running at a profit of 10 USDT. It will close 5 for you, and then the rest will now be closed entirely at your full TP there, at your full TP, which is 36.426 if it comes to that place. But if you have like TP1 up to TP3, maybe let's say for example, this is just a rough example, not the valid zones to take. Uh, TP1, TP2, and all that. So let's say I have TP1 here at 39.659. I'll click on close by. I'll click on close by, type in this digit. I'll click on close by, set it to limit, type in these digits, and then let's say maybe I'll close 25% at TP1, then TP2 I'll close like 50%. Then maybe full TP will now close everything for me. So that's it. When the trade has triggered, that's when you click on close by, change the limit, type in your digits, select the percentage you want it to close at when it gets to that particular price range. So that's how TP1, TP2, which is also partial profit taking, works. So I hope you are all following. Okay. I think I've answered this one. How do I know when to long or when to short? It depends on your knowledge of technical analysis on TradingView. Understand how well you know when price, what price will do in the future, using past price action to determine um, future movement of that particular asset. Understand? So that's that about that's technical analysis. Okay. Yes, it will. I always say this: the previous classes, this class, and the subsequent one we'll be holding, they are all recorded, each and every one of them. So after the class, immediately the recorded version will be available. So maybe you come late and you didn't meet up from the beginning, you can always watch the recorded version after the live class ends. You understand? So there is always a recorded version. Make sure that the recorded version is always available after the live class ends. So you always go over it at your leisure time. Whenever you are free, you watch till you understand everything about the topic. So that's that about that. Okay. Please can Zoom Master always analyze the trade, give you a yes, it eases off your the stress of technical analysis. So your knowledge of technical analysis plus Zone Master, that's an A plus in your trading journey. So it eases off the stress of your thinking and all stressing over getting entry, stop loss, and all that. You understand? It gives you entry, stop loss, take profit up to four most of the time. So it eases off that stress and all of that for you. So yes, it works. It works. So I believe a lot has been said and we have touched most of the basic concepts in this um topic this night. So I believe we can call it a day here now. I believe we can call it a day here now because a lot has been said and everything has been touched. Yeah, the basics we have discussed about the basics. Everything you need to know have been discussed. So no much talks, no much, nothing much to discuss again. Once you can grab all what you have discussed here, you can start, practicing and then it will work for you. Yes, just this is just all what you need. Once you understand all of this and then you apply it properly, and then you make more money. You make money in the long run. You understand? So thank you very much for your time in attendance, for coming out tonight to learn. Okay, I can see some remarks. Thank you too. Thank you for coming out in your numbers to learn, to contribute, asking questions and all that. I, for one, I also learned a thing or two. So it's not always about you coming to learn. Even the person explaining and teaching also learns, but you might not know, but he learns also. Yeah, I learned too. So thank you for coming. Okay. Will I be stopped out if price eventually goes above or below my price partial profit? No, no, no. You only be stopped out when you move your stop loss to entry. I forgot to state break even. There's what we call break even, taking your stop loss to your entry. You understand? Let me show you something. Now, when the trade start going in your favor, like has momentum down to the downside. For example, let's say you take TP1 now. I want to break even. Break even simply means taking your entry as your stop loss, which actually means um this your stop loss now, you wipe it off and type in your entry digit, which is 43.545. I'll type it there, 43.545. You see now, expected profit is 0.00000 USDT, ROI 0.00. I will lose nothing if it comes back to my entry. That's when, for example, you have taken partial, that is your TP1 has hit, it has dropped some profit to your balance at TP1, then you can break even. Let's say, for example, like this night now, I'm on a trade, it has hit my TP1. I'll just change my stop loss to that of my entry digit like this, click on confirm there, and then I can go and sleep. I have rest of mind. Even if I wake up and then it reverses and goes back to my, what's all this? It reverses and goes back to my stop loss, which is now at my entry point. At least I've made some money from the initial money I was about to make. At least little profit is better than no profit. Small money is better than no money. You understand? No greed here. Ehen. So whenever you trade, you see small profit. You sef no small, you try. Understand? So um that's what break even helps you to do. You understand? It gives you that um no risk trade. You understand? No risk trade. So that's what it does for you. Okay. Um Ladies and gentlemen, thank you very much for your time. This is about time we sign out. You have really tried. I did an hour and some minutes into the class already. Thank you for your time. Like always, we appreciate. From me, myself, um, and the entire team at Crypto Based Media, we say a very good thank you to you for your time. Devoting your time to come and learn one or two is indeed uh, a thing of happiness, and then we appreciate you for your time. It won't be a thing of success if I'm the only one here talking and talking to myself. You understand? Thank you for your attendance. Thank you for coming out tonight. You understand? So we appreciate. Thank you very much. Thank you for your questions, contributions, observations, um, everything. Everything, you understand? Contribution, questions, everything you have added for your time, most especially your time. You understand? And like I told you, I also learned a thing or two. You understand? So thank you for coming out too. We for learning from you as you also learned from me. So thank you very much. Yes, in one of our subsequent classes, there will be a topic on that. Yes, for now, we just need to digest what you have learned tonight. So thank you for your time. Thank you for everything. So at this point in time, at this very point in time, I will say a very goodbye to you, a very blissful night rest to each and every one of you, because I believe most of us here will have some busy schedule tomorrow as early as tomorrow morning. So a very blissful night rest to you as you go to bed. Thank you for your time. Thank you for everything here. So till the next class, from me, myself, and I, and Crypto Based Media, we say good night to you, good night rest. Thank you for your time. So, peace to you all. Stay safe and trade smart as always. Thank you.